Hello, members. So, good morning, good afternoon, depending on the time that you are watching this video. This is Anthony again. So, welcome to our video today. And in our video today, we are going to look at top-down analysis with gold. So, this is a gold pair. I know most of the people like trading gold. So, let's just have some overview of what is happening with gold and what are we looking at when it comes to gold. So without further ado, let's come down to our video. So we are going to now to start our top-down analysis on the weekly time frame. And from what you can see here on the weekly time frame, you can see very well that gold is very much bullish. But currently, if I can just focus on this uh, area here, you can see gold is somehow it it's like it's not picking a direction, it's like it is consolidating. But now we are going to dissect that one on the lower time frame for us to see what is currently happening. So from the weekly time frame, there is nothing that is much interesting here. So let me go to the daily time frame and see what is happening right here. From what I can see here on the daily time frame, this is the last break of structure here. So this is the last break of structure, the daily time frame. I can see the market reacted on this fair value gap. If I can mark it, this is the fair value gap that pushed the market to the upside. Let me mark that. So that is the fair value gap that pushed the market after trended to this fair value gap, which is in confluence with this how do you call it, the breaker block. We have a breaker block, the last buy candle before the sell. We have this kind of breaker block right here. That is our breaker block. You can see the market came exactly to that point that started pushing to the upside. So what does that one mean? It means this is our protected high, not protected, but this is our targeted high, and this is our protected low. So in other words, this is our dealing range in the daily time frame. So you can see here the market has been consolidating. It's not picking the clear direction. But from the daily time frame, from what I can see here, you can see that the market is a bullish trend. But currently, the market is ranging. So whenever we see this kind of consolidation, whereby the market is not picking the direction, so that one means that that one can be signaling to us that this bullish movement that have been there for a while, maybe it is the time that the market is willing now to start retracing to the lower direction or to the downside. So let me go to the one time frame lower for me to read the internal structure of what is currently happening. Time frame. Weekly my chart here. So let's start from this area. I want us to read the internal structure for us to get the clear picture of what is happening. So in the 4 hour time frame, what can we see? You can see here that this is the last break of structure to the downside towards this fair value gap that moved to the daily time frame. So if I can mark the internal structure, you can see that is the last. This is the last break of structure. After that, we get the change of character. We check. Yeah, we got a change of character here. So that. So, yeah, for our change of character, we have a body, a kind of body closing above the previous eye. It's our change of character. So where did the market retrace to? You can see the market swept liquidity below this low. You have the sweep of liquidity below this low, like that. That is liquidation of that low. After market swept liquidity, then it gave us the internal uh, market structure here. You have, if I read it clearly, let me mark this one with different color. This is the last internal structure. Let me mark it with the different color. After that, internal market break of structure, we saw is market structure shift. So change of character like that. After that, you can see here we have another break of structure. We have a break of structure there. Then after that break of structure, we have another break of structure at this point. So break of structure. Then what happened? Remember, after this break of structure here to the downside, the market gave us this change of character. So we were expecting the market to push to the upside and break this high. But that one did not happen at this point. This one shows that the market reacted off of this supply zone right here. You can see the market reacted off of that supply zone. After reacting from that supply zone, you can see we had a market structure shift at this point. We have a market structure shift like that. What does that one mean? So after market swept the liquidity below this low, we were expecting the market to go and push above this area. So, but then what did not happen? This supply zone held the market, and in fact, this is what I was expecting. I was expecting this after the market traded to this supply zone. I was expecting some drop either to come to this supply zone and demand zone right here. Then from there now, we can see a reaction to go and break above this high here to also take out this here. But that one did not happen. The market kept swept liquidity below this low, tried to move to the upside, but it came down and broke the structure to the downside, and it also had another break of structure to this side. What does that one mean to us? That one is signaling to us that the market is not ready to go to the upside, or in other words, the market is now pushing to the downside. Or we are now, this uptrend is now coming to an end. So for me, what I can see here, I can see that you have this fair value gap now here. Remember now the market has shifted from bullish to bearish. So this fair value gap has held the market for a time frame. You can see the market traded to the CE or the consequent encroachment of this FVG. You can see the market is reacting to this FVG. So for me, currently uh, the gold is bearish from what I can see and from what the market is showing me. So now I will go down to the lower time frame, that is 1 hour time frame, and I want to read the internal structure for me to see what is currently market is telling me. Because you can see this is the last breakout structure. Get the market structure shift here, a breakout structure, another breakout structure. For me, this is not a valid retracement. So this is the last breakout structure here, the 1 hour time frame. So for me to say this retracement is valid, for me to to come into conclusion that this retracement is valid. So first of all, you see, this is the last bullish candle here before the bearish candle. This bearish candle did not sweep liquidity above this bullish candle. So for me, that one disqualifies this one to be a retracement, a valid retracement. And still, we can see here, for me to say a valid, this is a valid pullback or retracement, I must see three candle are closing below each other. You can see here, this is the first candle. The second candle did not close below the first candle. So this in the 1 hour time frame is not a valid pullback. Now that one means that this is the last break of structure, and you can see here we have got our market structure shift. This is our market structure shift in the 1 hour time frame. What does that one mean now? It is that is the second confirmation. Remember, if we go to the 4 hour time frame, now if we go down to the 4 hour time frame, go down to the 4 hour time frame, sorry for that. So we had one confirmation was after this break of structure, we saw this market structure shift. That is one confirmation that we are bearish. The market is now done with this bullish. Now we are bearish. The second confirmation, if this one was just a grab of liquidity, maybe someone could have said that this one, maybe the market wanted to grab liquidity below this low, maybe react from this demand zone. So then if that one was so, then we would not have had this market structure shift here. If that one was, if this liquidity was strong enough, it could have pushed the market and break above this line. But what did not happen? You can see the market reacted off of this SBT. So that is a clear indication to us that the market is ready to push to the downside. Now, going down to 1 hour time frame, what can we see here? The 1 hour time frame. After market traded to this FVG, you can see here we had the market faced some rejection off of this fair value gap because it's very powerful and pushed the market to make a market structure shift here. So if I pick my Fibonacci tool here, I place from the top to the bottom like that, you can see the market has already traded above the 50% of the Fibonacci tool. So that one means that we can now look for sales because the market has come to the premium or the 50% of our Fibonacci tool. Now let me remove the fib. Now what did I had as my POIs? I had this FVG right here. That was my first POI, that FVG. My second POI was this FVG right here. That was my second POI. Remember, I don't know which FVG is going to hold the market here, guys. I don't know which FVG is going to hold the market. So what do I do? Now it comes to the third option, or the second option, which is confirmation. We have to go now to the lower time frame for us to confirm which FVG is going to hold the market. Now going down to 15 minutes time frame now. Okay? Going down to 15 minutes time frame now, because that is the time frame that we are going to confirm our POI. You can see here, after the market traded to this FVG, what did we see? So this was the last break of structure to the downside with a change of character here. This one for me, it's not a valid pullback. This one is also not a valid pullback and not sweep liquidity down here. So after the market traded to this one, you can see here we had this sweep of liquidity. After sweep of this liquidity, now we had a retracement to this demand zone right here. Then this was the last break of structure to the upside. So after that, what can we see? Remember, this is what is happening currently. After this break of structure, you can see here we have a change of character, guys. This is a change of character. That one now confirms to us that this FBG is strong enough to hold the market. And you can see here, after what has happened now, you can see after market uh, respected this FBG and stopped to do the order block on the 1 hour time frame. Now you can see here we have when the London kicks in, we have a very strong momentum to the downside. The market has shifted the structure to the downside. Now, this is a confirmation for us now that the market is now ready to push to the downside. Now, this is a very good area for us to take a trade. Now, this becomes my supply zone. This is my supply zone now. This is a very nice area to take a trade. You can see this supply zone of mine is very strong, or another block, whichever the name you call it, because you can see we have swept liquidity. You can see here it has swept liquidity above this high. We have liquidation of that high. Then it went ahead and tapped on this order block here. After that, liquidation, you can see it was a very strong momentum and pushed and broke the structure, or it changed the character to the downside. Now this one is a very powerful order block for me, or the supply zone. So now this is where I'm going to place my order, the stop loss above the order block, because the market can decide to go and sweep liquidity. But I don't expect the market to sweep liquidity here, because it's already swept liquidity above this high, and there is nothing much interesting here for a market to come and liquidate. So, but I will place my stop loss above this few pips above this high. Then where will be my target? So if I try to zoom out, here we have a demand zone right here. So I can target that one. This demand zone. That one is giving me 1:3. But now because we know we are very much bearish, so you can target this low right here. That should be our final target. So now guys, this is my take on gold. I don't know what you think, but for me, that is my setup on gold. I don't know what is your view on it. So I'm going to place my order right here now, and just let the market do its thing. So thank you for watching. See you in the next video, or in the comment section. If you have not subscribed to this channel, please you can consider to subscribe, and also leave a comment on the comment section which pair do you want me to analyze next. Otherwise, I wish to stop at that point. See you in the next video. Bye.